And it does remain to be seen if a wage agreement at Eskom will reduce the very harsh power cuts that we have endured as a nation. The rolling blackouts escalating to stage 6 recently, and that has raised the risk of recession. Growth in the first 3 months of the year, or quarter 1 as it's called, was stronger than expected at 1.9%. Now, quarter 2 results are coming out in September, and those are likely to be affected by the flooding in KwaZulu-Natal, low confidence levels, and the crippling power cuts. And what thereafter, Investec's chief economist has warned that if stage 6 persists or worsens even, South Africa will likely see a contraction of GDP in quarters 2 and 3, and that means a technical recession. Alex Forbes has also warned that stage 6 is wiping out 4 billion rand from the economy for every and each day that it continues. To discuss, we're joined by Economist now, Sifiso Skenjana. Thank you for being with us. In global news, the use of this word recession is rising. Do you agree the possibility is now coming closer to home?
Yeah, I mean, I think if you look at some of the things that have informed the energy around that rising in a global context, where we've seen in the US, we often talk about the inversion of the yield curve. And in simple terms, when investors demand more money today than how they demand money for long-term borrowings, when that tends to be higher today than long-term, it means that they don't believe that there's growth coming in the long term. And that has, in the last 8 recessions, predicted the recession. And so a month and a half ago, we started seeing the US yield curve inverting, and that already was starting to give a sense that global markets are expecting some recessionary pressures. When you then look at a South African context, we've seen business confidence numbers and business activity numbers, and at an index level, 50 index points is usually at about the level at which it means that there's neutrality there. Business activity is now sitting below 40 index points, and so suggesting that there's very little or there's muted business activity at this point in time. And that is certainly suggesting that we're not pumping from all engines, and I think it certainly does exacerbate the risk of a recession even in a South African context.
And how would we be looking without the power cuts? Because there were some better indicators at the beginning of the year, tax revenue coming in from the miners, better commodity prices, even the debt outlook was better. Has that all been undone now?
I think certainly stage 6 and stage 4 has undone a hell of a lot. We see that up to about 200 or 300 billion can be lost per month, depending on the stage level of load shedding that you've got. And so already we're probably close to about 20 or 30 billion. And this is not including the burning of diesel as well, which often is then recovered through what we call the RCA account that comes through the consumers. And so we certainly, I think, are seeing a lot of those gains being undone on the back of what Eskom is doing. We saw better than expected manufacturing numbers. That's certainly going to undo those numbers. We see also pressure coming from the financial services sector. Again, what's happening from an Eskom point of view is certainly going to be one of the pressures. And then also, as you mentioned earlier, everything that's happened in KZN and trying to rebuild that economy at this point in time, that is the second largest economy, but also from a manufacturing point of view, it contributes about 22% of our manufacturing. And so with all the load shedding that's happening now and all of the other businesses not being able to operate at an optimal point, I think we're going to have a massive pressure point in terms of our growth numbers going into the second quarter.
And you've spoken about the potential for even higher power prices, and we know the fuel prices are becoming a growing crisis, according to many, and food prices going up. I mean, so we know that hits our pocket, but explain the economic effect, how it adds to this pile of pressure, really.
So most of the prices that we often see as legislated prices, we call administered prices. And so that's water, electricity, and all of those prices now are at inflation levels in excess of about 10%. That's one of the things. Secondly, the Reserve Bank did a study that did some time series analysis from 1996 to about 2017, looking at the role of fuel prices on headline inflation. And they found that any variation in inflation is explained by at least 25% of changes in fuel prices. And so certainly then when we're seeing fuel prices running unabated at this point in time, we know that the impact that it has on inflationary outcomes is worse off. And then you'd look at and say, also then, there are small businesses, particularly in the township economy, who can't pass on those costs readily to consumers. So with oil price, with cooking oil going up at that level, it's going paraffin going at that level, polony. These are all the businesses that use, all of those things as inputs into the goods. They can't pass those on. If you've got a bakery and Eskom switches off the electricity without giving us notice, your bread doesn't rise, and you've got to throw away that inventory. And so there's also something we're missing here about the impact on small businesses, both through the lens in which they can't pass on those costs, but also through the lens in which actually a lot of the businesses, hair salon, you have to close it when there's no electricity. And these are some of the challenges that we're talking about. These are multi-billion rand industries in terms of the township economy in South Africa.
All right, so all bad news, and many just hoping that Eskom can be turned around as quickly as possible. And that's a theme we're going to continue with. That was Economist Sifiso Skenjana.